Hey guys, hope you guys had a good week. I was off, I was on vacation. I'm back now, so let me know if you guys had a good week or not. But let's take a look at where we're at here. We're going to play a little catch up here since I wasn't here for the week. So, the biggest thing to talk about right now is the big old cup and handle. If this cup and handle is to play out, and now this one would have started back on February 2nd, that means our bottom was at 380.7 area and our top potentially could be right here around 415.1. If that's the case, that's about a 9% total gain from bottom to top. If that's what happened, then we should look for about a 33.3% retrace to fill out the handle. When that handle gets filled out, our downside target would be about 402.6. However, if we want to push a little higher and try out the 417 supply for the actual true top, then our retrace is going to be a little closer to 405.2. I still like that we are putting in the temporary top here. Although one thing that we really do need to focus on, I'm going to zoom in really close to here because we have a lot of levels here, is the fact that we pretty much have been trading now for the last 10 days with market closing between 406.5 and 413.6. So realistically, until we close over or under one of those levels, we really are just in a pretty good consolidation. We are in this month-long support line, and we can even really just completely get rid of this because that doesn't matter at this as much anymore because it's been broken. But support-wise, we have traded in the same support line and had a nice V bottom right here, which further proves the cup and handle since the March bottom. So this is over a month long now of trading at the same support. So that support for Monday is going to be right here at 410.95. Basically what that means is if we finally break under 410.95, then that support is broken, and that really does open the downside, and my downside target is going to be 405.2. If we lose 405.2, then we start talking about coming down here. We did yesterday put in a new demand, which is support at 408.9. So that does to provide the upside push, which we did then hit 414. So now we're at the point where we're going to start thinking about making a new supply. Until a new supply is put in, their favor does go to the upside. But something to keep in mind here is that we have officially lost extreme bull momentum, which means that we shouldn't favor hitting and bouncing off of the daily AEMA every time, which 5 out of the last 7 daily candles has bounced off of the daily AEMA. Now, from a weekly standpoint here, this is where it's a little more intriguing. We had this massive breakout triangle I was telling you guys about that dates over a year long now. We did break through that resistance level, but we also double topped perfectly off of 412.5 weekly resistance. With that weekly double top, that actually would signify a downside push and possibly a double top right here, or much like we had here with this big rejection down, is going to be coming. However, we did backtest the weekly 5 or weekly 8 EMA support and bounce. So the weekly is a little more neutral to no real sense of direction here. One other interesting thing that I've talked about quite a few times, on average, 407.3 has only been closed. Now this is a weekly close of the candle, closed over 3 times. So 3 weeks in a row, it closes over that level before we retrace back under it. We currently are at 1, 2, 3. So that could mean we are putting our top in, and we should look for that retrace under 407.3 next week. There is one case, which is right here, where we did close 4 weeks over 407.3 before we finally closed below it. If the bulls are going to run this, our next big resistance is going to be right here at 417. And then realistically, we have 421.98. Now, interestingly enough, many people forget about this, but we actually have a gap from 419.96 to 421.22 that dates all the way back to August. We don't very often see a weekly gap, but we do still have that one sitting up there. We fell just short of that back here in January. So bears, though, they want to get this closed back under 407.3 end of next week. And the bulls are going to want to definitely get through this 412.5 double top and most likely try to close over 417 if they have any hopes at continuation to the upside. Now, taking a look at futures here, this 41.72 is attempting to be a really nice double top. Same thing here. We pretty much are just holding a 41.14 to 41.72 consolidation now for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks we have, or days in a row, we have closed in that same about 60-point range. We did put a new demand in right here on Wednesday at 411. 41.18. So with this 41.18 demand, that then brings in the potential for a push to upside supply, which is right there at 41.52 and 41.58. We do have another supply. I don't have it marked up here. It is up at, let me pull it up here for you real quick here. 41.98. So that's going to be right here. So we do have one more weekly supply right here at 41.98, which we could be targeting. It's 41.92 on TradingView, 41.98 on I'm sorry, what am I looking at here? Oh, on TOS, sorry. TOS, and then they have a little bit of a different numbers that play out. But anyways, so we could be trying to break through to touch that 41.92 supply. Now, same thing here, futures daily is attempting to put in a new supply or resistance, and we have lost extreme bull momentum, so we very well could see a potential for a drop back below here. I'll be definitely watching it closely here as market tries to close. And then we are still holding this nice blue monthly bull channel here with support for Monday coming in at 41.38.5. So break below 41.39 and we are likely to see some downside. However, from a weekly standpoint, it's the same thing here. It's a little confusing because we did break through the breakout triangle resistance, but we also broke the short-term bull channel. We did try to backtest 40.95 and bounced off that range, and we are holding the daily 8 EMA here, which should provide a push up, which we did get. However, one thing that's interesting here is that we did close over this 41.48 weekly double top, but that is the one at 41.12 that we did reject at on SPY. So it's interesting to see that happen on SPY, but not on futures. Bulls are going to want to try to continue to break through 41.75 and eventually target 42.20. However, bears, they need to get this back under 40.95. If they can close under 40.95, then realistically we can start pushing back down to this 3900 or 39.86 to 39.20 range. Sorry, I'm unfortunately at Disney. We all got a little sick and we all have fevers and it's a whole thing. So I sound a little congested. That's why I'm gonna be really zoomed out here on the VIX to try to show some stuff here. So interestingly enough, the VIX actually closed at 17.07. That is 1 penny higher than its 52-week low. So now what's interesting about this is right here on February 2nd that we did hit 17.06. That was the bottom of the VIX and the top right here of SPY. So that led to a next day close of negative 1.06% on SPY and also led to a negative 9% drop over 26 days. Now, the other time the VIX was this low was all the way back here in January. The VIX hit 17.36. So I'm going to go all the way back to January here real quick to show you this. So that'd be this day right here. The top was put in on SPY, the bottom of the VIX on January 12th. The next day, SPY dropped negative 1.38% and led to a negative 11% drop over 12 total days. Now, the other time this happened was right here. The low was put in at 16.34. This was actually the low of the VIX before the bear market started, or I guess you could say this was the start of the bear market. And this was also the 52-week high on SPY right here at 479.98. So now on January 4th, we put the low of the VIX in and the top of SPY in, which then led to a negative 1.92% drop on SPY the next day. And that was a negative 5% drop over 6 days right here. Now we did have that little bounce and then we dropped more. And as you can see, that also led to the 2022 bear market, as you can see right here. So basically what I'm saying here is, on average, when the VIX is this low, it likes to lead to a top on SPY and a low on the VIX. So on average, if you take those 3 events that we've been this low or done a similar thing, we are actually averaging a negative 1.45% drop the next day after the VIX is this low, and a total drop of 8.33% over 14.6 days. Now, that actually, interestingly enough, would be May 1st, and would put us right back here at 380.7. So this could be a potential target for us to be here on SPY. Now, Bitcoin is still running pretty decent here, continuing to top. Interestingly enough, the dollar did finally bounce here. It's tempting to break back over its AEMA. However, as you can see here, since March 8th, the dollar has just gotten absolutely slaughtered. This is the lowest the dollar has been also since February 2nd. So interesting enough, if the dollar bounces and starts gaining some strength here, that could definitely take down equities. However, this is a big reason many people think that despite everything that's going on, why we are still seeing the market run up, because the dollar is weakening so much and that's pushing up the assets. The last little thing to talk about here is the 10-year yield. We are in a possible bear fly pattern, so this could lead to further downside. However, we bounced off this April low here, which was the low was 3.253%. And we're trying to get through this breakout triangle right here, which Monday needs to see levels get back over 3.53%. If we can get really through this 3.535%, then we're going to start pushing up here. If we're seeing the rate go up in the 10-year, that means people are being a little bit more risk on. So we saw right here, there was that massive piling into the yield. So this will be kind of interesting to see what the 10-year does. Generally speaking, in the past, outside of this right here, when the rates went up, we also saw the markets drop with that. Generally, what we used to see was the dollar and the 10-year would go up and SPY would drop. Now, one other really interesting thing today is that the VIX dropped a total of 4.15%, and the SPY actually put in a negative 2.4% red day. It's not too common that we see a red day on SPY and on the VIX, but it does happen, as you can see. So overall, it's really tough to say. I would say I lean more bearish. I still think we're going to come back down and touch 405.2. And I'm still realistically looking for us at some point to come back down to minimally 399. But mostly, if you look at futures, to come back to 415, 440, and 453 to take out these supplies. Bulls can't leave these supplies down here. They need to come down, be taken out, put a new demand in somewhere right around here, and then we can punch higher. You just can't leave these supplies like this. Otherwise, at some point, market's going to come back down to correct that imbalance, which is basically what we have right now on a longer time frame. So it's kind of where I'm at. I am in some 98 DTE 405 puts right now, down about 20%. And I did decide today to swing some SPYX 3 DTE puts. SPYX, interestingly enough, and I haven't seen this in forever, but at close, it's a little different now, but at close, IV was only 8.39% on SPYX. I don't know the last time I've ever seen the IV that low. So it was worth the risk of the reward just for the IV potential pump if we can get a drop over the weekend, especially if that VIX will spike and open on Monday. So hope you guys have a good weekend, and I will see you guys on Monday.